go over this, to brief everyone, and particularly answer questions. And it turns out that the timing is perfect. Tomorrow morning, the federal government, through the Office of Management and Budget, is releasing the revisions to the Education Department General Administrative Regulations, Department of Agriculture Administrative Regulations, Department of Health and Human Services Administrative Regulations. So being here and telling you what's happening tomorrow, and then on Friday, it's all going to be printed in the Federal Register. You're getting a heads up just as it's about to happen. We want to share with you what the content is. I'm assisted today by my associate Steve Spillin from Bridgeton and Manasset. And also up here on this visit, we're really delighted that we were assisted by Dr. Patrick Ainsworth. Dr. Ainsworth, for many years, was the Assistant Superintendent for the California Department of Education, national visionary expert on career technical education. We spent yesterday working with Kurt and his team on trying to revamp the CTE delivery system. I will be the primary speaker this morning. We have about 8 hours of information to share with you that we're going to try to accelerate to about 2.5 hours. I'll be assisted from time to time by Steve. Most importantly, as we go through these issues, please do not hesitate to ask your questions. It is being videotaped for the benefit of some of your colleagues that are not here, and perhaps some of you may want to use this to share with district personnel who are going to need to know as well what these changes are. We're at a time when you come into work and you just don't know when are all these changes going to stop. And sometimes educators, they don't like change. Sometimes educators, administrators, they don't want to see change. Lawyers, on the other hand, we love to see change. We love to see change, obviously. So you've got a new governor, new administration now in place. You're dealing with that change, changes with your state legislature, but also very significant changes in Washington, D.C. You've got, starting in January, a whole new Congress coming in that, for the first time in a number of years, will be led by both a Republican majority in the House and the Senate, and obviously that's going to have an impact on federal education funding. There were significant developments over the last 96 hours with federal education funding. The new term out of Washington, there's always new terms out of Washington, but the new term out of Washington is Chromebus. Some of you may have heard of that. A month ago, nobody really heard of Chromebus, but that is the term of the day, Chromebus. It comes from CR, which is a continuing resolution on one part, and omnibus funding on the other part. And they, for the first time ever, they combined a continuing resolution with omnibus funding, and they called it a Chromebus. Now, what that means basically is that with the Republican leadership taking over and being none too happy about what the president has done through executive order with regard to immigration reform, they decided, how can we challenge the president? Well, they're challenging the president in a number of different ways, and one is to try to stop the enforcement of some of these changes. There's one agency, department in the federal government, that handles immigration issues, and that's the Department of Homeland Security. So they have placed the Department of Homeland Security on a continuing resolution. They have only funded the Department of Homeland Security through February, because they will be back in town really late January, getting down to business in February, and they can go to work to decide what parts of Homeland Security do we want to fund, what parts of Homeland Security do we want to close down. So rather than closing down the whole government this week, when the existing continuing resolution from October 1, 2014 ended, they said, no, we'll fund government, we'll fund education through September 30, 2015, but there's one agency we're going to punish, and that's Homeland Security. So that's why Homeland Security is on a continuing resolution, everybody else is on this omnibus appropriations bill. I think it's important to note that there are very, very nominal, modest changes to funding for ESEA, IDEA Part B Special Ed, and Carl Perkins Career Tech. Basically, level funding for all the major state administered programs. We're talking a lot this morning about state administered programs. The funding contained in the appropriation bill is the funding that will come to Alaska for all of the ESEA, special ed, and career tech programs for the period beginning July 1, 2015, running through June 30, 2016. So that is an important fact that we all need to know, that funding is not going to be cut for the next 12-month period, July 1, 15, for the major state administered programs. What is going to get hurt, of course, are what are called the individual Obama initiatives, such as Race to the Top, I-3, all the competitive programs that the Obama administration has taken responsibility for. This Congress, the Congress which has just ended, was not particularly enthusiastic about funding those. So those are taking a hit, particularly zeroing out the Race to the Top initiatives across the country. But by and large, what you do need to know is that for the other major federal grants, they will be level funded. Do you want to add a comment to that at all, Steve?
No, except that they're going to be level funded now, but for the next year, with the Republican-controlled House and Senate, I mean, that's going to be a major fight going into the next Congress, because they're going to want to start cutting a lot more. The president has already made it very clear that he's got his veto stamp ready to go. So just because we have a united Congress doesn't mean we're going to get any of this stuff through any faster. We're going to run into these same problems around this time next year, a lot more CRs, a lot more omnibus bills. It's going to be bumpy waters for the appropriations process.
Yeah, and the good news is the Republicans have a career technical education caucus for the career tech ed people, and they're really supportive, and it's also part of their platform now. They want to see career tech ed expanded in the United States. So
that's one of the few education programs, career tech, that has been fully supported by Republicans and Democrats. I think that Republicans and Democrats have wanted to see significantly more for special ed to bring it to 40% federal funding. ESEA, of course, that's where the biggest contention is as to how the reauthorization of the Elementary and Secondary Education Act, or No Child Left Behind, should go forward. Steve, I do believe that with Lamar Alexander taking over as chair of the Senate Education Committee, having been former Secretary of Education, President of the University of Tennessee, former Governor of Tennessee, it is likely that the focus will first be on the Higher Education Act. Would you agree? On the reauthorization of the Higher Education Act before they turn to the reauthorization of elementary and secondary, which is going to be a much tougher battle. We're not particularly optimistic that the Elementary and Secondary Education Act will be reauthorized next year. We do believe that the Higher Education Act will. Where special ed and vocational education fall in that is a lower priority right now. But we are pretty optimistic that we will see a reauthorization of the Higher Education Act. So new Congress, that's a situation on funding. We expect to see first some legislative action on higher ed. That's only a small part of the framework that you deal with. What is changing, and what is changing tomorrow, is the entire administrative regulatory system and how it impacts federal programs, not only education, but all federal agencies, National Science Foundation, school nutrition programs at the Department of Agriculture, and so forth. And that's really what we want to focus on today. There are 10 major themes that we'll be discussing with you this morning. Let me run through them briefly, and then we're going to start going through the documents. Everyone hopefully has two documents, a copy of the PowerPoint and a copy of the December 26, 2013 Federal Register, because we'll be making specific references to that, and that is final guidance. That is final guidance. That is what's being adopted by the Education Department tomorrow. So the first is a focus on outcomes, and I know we've got the internal auditor in the room and folks that are dealing with the audit side. But some might argue that this is the most significant change of all in this framework. In other words, we've been operating under the same administrative rules and cost rules and audit rules for about 40 years. Sure, in 1995, the Office of Management and Budget changed some of these rules, but those were by and large cosmetic. The change that's taking place tomorrow is not cosmetic. The change tomorrow is a complete rewrite of the framework that we've been dealing with. So the past 40 years, the focus for auditors is that, okay, they come in after the fact. The dollars have gone from the grantor agency, Department of Education, Department of Agriculture. They've gone to the grantee, say the Alaska Department of Education. The grantee, Alaska Department of Education, then allocates those monies either by formula or competitively to sub-grantees. The sub-grantees spend those dollars, the auditors come in each year and do an annual audit. Function of the auditors was the school district, was the post-secondary institution, was the nonprofit compliant with what is required by federal law. And we say federal law, obviously for those of you that are relatively new to the enterprise here, you come into work, you think, okay, this is your responsibility. It's ESEA Title II, it's IDEA Part B. What do you need to know? Well, obviously you need to be familiar with what's in the statute for each program. We're dealing with about 150 federal education programs alone. You need to know what's in the administrative rules, what's called the Education Department General Administrative Regulations. And encompassed in the administrative rules are the rules that the Office of Management and Budget writes on cost, administration, and audit. Paul referred to it as the super circular, the omni circular, all sorts of names out. The current name that's being used that you need to know is Uniform Grant Guidance. It's called the Uniform Grant Guidance, or UGG, not the boot, UGG. UGG, you can begin hearing that UGG, Uniform Grant Guidance, rather than super circular, rather than omni circular. But the UGG says, and for those of you who have it, we're going to, Steve and I will be making numerous references to it. Right on the first page, 78590, it says that the modifications here are to more effectively focus federal resources on improving performance and outcomes and away from compliance. Auditors have gone to accountancy school to be able to go into the districts to say, were you compliant? Did you spend the federal dollars for allowable costs? Did you spend it on eligible students? Did you meet all the fiscal requirements? Did you not supplant federal funds for state and local funds? They are looking for compliance. Either you are compliant, or you're not compliant. There is no gray area. And that's what they've been doing for 40 years. But really, starting tomorrow, OMB is saying we want there to be a shift away from compliance towards performance, looking at outcomes. So when Alaska sends in its annual and state plans to Washington, and it says that this is the number of individuals that are going to be served over the next 12-month period with these federal tax dollars, you're going to begin to be judged, did you serve that number of students? If the commitment is, well, this percent of students will be credentialed in terms of graduating high school, or that this number of students will be deemed proficient in reading or on math, you will be judged, did you accomplish that performance outcome? Now, people say, really? Does this mean that we don't have to worry about compliance anymore? If you read the text of the 100 pages of the Federal Register that you would have, you might be convinced that, yes, that performance trumps compliance. As lawyers, we're a little bit jaded, we're not so sure. And maybe, rather than the disjunctive of one over the other, maybe we should be concerned with both performance and compliance. So don't interpret my comments as saying, starting tomorrow, nobody needs to worry about compliance anymore. I don't think that that's the case. Time will tell. Time will tell as the feds come in, do monitorings, they send the federal auditors in here. We'll see, where does performance stack up over compliance? But in order to reflect performance, the federal government is going down a whole new road on performance metrics. And we will walk you through the new sections of the final guidance that will require the Alaska Department of Ed to annually report for each program exactly how well did the districts do on each federal program in terms of what they said they were going to do. And if they did not accomplish what they said that they were going to accomplish, why not? What were the reasons for the shortfall? This information is on performance metrics, does not take the place of the accountability provisions in the ESEA, IDEA, or Perkins. This is over and above it. It's a separate set of accountability provisions. It's more reporting that will be required and a greater burden placed on what's called the pass-through agency, which is the Alaska Department of Ed. By pass-through, under state-administered program, it's where the monies go from Washington to the state ed agency, pass through to the sub-grantees. And we'll walk you through what those metrics are. 3, risk assessment. In the past, we all know that the Alaska Department of Ed had a responsibility to monitor its sub-grantees. Monitoring meant a lot of different things to different people. Many states carried out their monitoring on a cyclical, geographic basis, saying, over 5 years, we'll cover the entire state. 1 year we'll do this 20%, next year we'll do that 20%. Those days are over. Now the administrative rules require that the monitoring be done solely on a basis of a risk assessment. It's going to require each pass-through agency, prior to giving the funds out to sub-grantees in July, or whatever the cycle is that you use, that you undertake a risk assessment of each school district in the state using a point system, assigning points, and then based on that assessment, you will decide what special help, technical assistance, specialized training, or condition should be imposed on that school district. That is not discretionary. That is a mandate that will start when you pass monies through the ESEA, IDEA, and Perkins on July 1 through 15. Financial management policies, there are 7 of them. There are substantive changes that will require not only the state, but all of your school districts to have written financial management policies dealing with cash management and dealing with allowability of costs in place. When the feds come to visit you, they're going to ask you, where are your written policies on cash management and allowability? When you go to visit your locals, you're going to ask them, where are your policies? So this is not something that the state says, okay, we're going to develop a prototype and we're going to send it out to all the rural school districts here in the state, and they're just going to copy it. That's not what this is about. This is about each district putting on paper exactly how their organization operates. Equipment use. There are substantive changes to equipment, particularly a change by the federal government in saying, if districts are spending federal funds on equipment, we do not want that equipment sitting idle during the course of the day. We absolutely want to see it shared. As long as it does not interfere with the primary use, we want to see it shared with other programs. And they set out priorities, they set out preferences, they set out certain changes on disposition of equipment. And they, for the first time, define computers not as equipment, but as supplies. And there's a change with regard to the disposition of computers. Micro purchases, historically, there have been 3 levels of procurement thresholds. One, small purchases, competitive bids, sealed bids. They've added a 4th called micro purchases, which is a whole new area of flexibility. It's for procurements up to $3,000 that would simply allow not only the state, but your school districts. At the end of the year, they want to make sure that they spend down whatever funding amounts that they have. They can go to Staples, they can go to any department store. As long as the amount is under $3,000, they do not have to go through a cost analysis or any competitive bidding. It's a whole new area of flexibility on procurement called micro purchases. A major theme is corrective action. To the extent that you identify non-compliance with any of your school districts, they have to agree to immediate corrective action to fix it. Immediate. If they do, what's triggered is a new theme called cooperative audit resolution, where the focus is not going to be on the payback of funds, but the immediate correction of the problem to improve the program. And I'll point out to you the sections that relate to that. Family-friendly policies, first time ever in the history of federal grants, recognition by the federal government that federal grants have by and large made it difficult for women to participate in this enterprise. So they said we need to do something about that. So they said these new rules are family-friendly. For the first time, federal grant dollars may be used to provide the cost for school districts, the state, when you conduct conferences, to identify the cost for child care, and whatever incremental cost is incurred by the district or the state for running a conference for an individual who has child care expenses. They spend $200 a week, they've got to attend a conference up in Anchorage, now they have to spend $300 a week. That incremental cost may be an allowable charge against federal grant funds, and they characterize that as family friendly. False claim certifications, they want to beef up the accountability part of this, so they add an assurance, not a simple assurance that you check the box, but where you sign a very clear statement that on expenditure reports, performance reports dealing with federal funds, or draws from the federal treasury called G5 to pay salaries. There may be a number of folks in this room that have that authority. All the districts that you work with, obviously there are folks that have that authority. They will now be signing insurance each time they draw from G5 that under penalty of perjury, that the information that they are providing the federal government in that report, expenditure report, performance report, or voucher for payment of salaries, is accurate and complete. And if it should not be, then they realize that they'd be subject to criminal and civil penalties. So they're getting serious with regard to that. And then the audit thresholds. For about the past 10 years, the law under the Single Audit Act has been that if school districts, nonprofits participating under your jurisdiction expend in the aggregate under $500,000 in federal funds, and I do believe that some of your rural districts do spend under $500,000, then no federal funds can be used to have an audit. That is now being raised from $500,000 to $750,000. So of your 38 really rural districts, some of those may have fallen between $500,000 and $750,000, been raised to $750,000, they will now fall outside that orbit, meaning no federal funds can be used to pay for a single audit if the aggregate federal expenditures from school lunch, under ag, from Head Start, from Health and Human Services, or any of the multitude of programs in the U.S. Education Department, the aggregate falls under $750,000. those are just the 10 themes that we're going to be dealing with. Any questions? And please, it's better when you ask questions, we're videotaping it because others who are not here today are going to have the same concerns. Yes?
In the past, the procurement rules stated fairly clearly that you would follow the state, whatever the state procurement guidelines were. So is this the only change, that micro purchases are allowed? Because our threshold for what would be a small purchase is considerably higher than $3,000.
Right. The law is unchanged with regard to states. It says states must still follow state procurement law. It says everyone else must meet these federal standards, and where they say small purchase is now $3,000 to $150,000, and micro purchase is $3,000 or below. And that applies to all of your school districts.
All right. So our regulations don't change, just
Right.
the school district.
Yes.
I had a question. You were talking about the monitoring based on the risk assessments. The USDA programs have very strict 3 years or less requirements on monitoring. So do you see that changing? That would be solely on risk assessments or within
Great
that
question.
3 year?
So as we go through these rules here this morning, keep in mind that whenever you have a more restrictive federal statute, that the school nutrition program says you shall do X, Y, and Z with monitoring. Whenever you have that situation, you always follow the more restrictive. So as a rule of statutory construction, if you have state rules or state policies which are more restrictive, you follow those. If you have federal statutory provisions that are more restrictive, you will always follow those. Don't forget, there's 750 federal programs out there. The Office of Management and Budget is putting out rules for all 750. They say right up front, if there's a conflict, tension between a program statute and what we're putting out as general guidance, always follow that program statute. So you would not deviate from that if you've got a more restrictive rule. Question?
Yeah. On the risk assessment, you said that risk assessment needs to be done on each school district, that does it have to be per
It's
grant?
annually, you carry out the risk assessment before you give the monies to any district. You're doing a risk assessment to know what are the risks, because these are state-administered programs, what risk is the state undertaking by giving these monies out to that district? Is there a risk? What can we do about that risk? How can we mitigate that risk by imposing certain conditions?
But can we do it just on the district basis and not on each individual grant that's going out the door? Like the districts get the ESCA, the 6B, do we have to do that risk assessment on each one of those grants? Or can we say this district is high risk and we need to do these factors?
You clearly can designate a district to be high risk. Often, if it's problematic in one program area, it may be problematic in another. But you also have the discretion to impose conditions in a district on a particular program. The state clearly has that discretion. Okay, so let's get into the meat of this. On the dates, just quickly, this process began in 2011. It began in 2011 when President Obama put out an executive order to simplify the regulatory process. Each agency said, well, what can we do? OMB, and it's important to understand, just in Government 101, that there are about 35 agencies in Washington, D.C. that distribute financial assistance, that issue grants. There's one agency that's called the super agency over the 35 that provides guidance to those 35. That is the Office of Management and Budget. That Office of Management and Budget is the White House. They are basically combined. OMB is in the Executive Office building, which is really part of the White House structure. They provide guidance as the super agency to the other 35, including the U.S. Education Department. So in 2011, the administration said, oh, we're going down this new road of regulatory reform. Well, I moved to DC under the Nixon administration. I know my associate was not born during the Nixon administration, but every administration that I've lived through in Washington, DC, and I was in a former life a federal official. In fact, I was one of the writers of the original EDGAR, which we'll get to, said, we're going to do regulatory reform. I mean, every president, Democrat, Republican, we're going to do regulatory reform. This is the first real reform of the administrative cost and audit rules. So the process started in 2011. 2012, the Office of Management and Budget floated certain ideas in terms of what needs to be changed. What was out there? What were the problems? One of the big problems were audits detailing time and effort certifications. Too many school districts in America were facing multi-million-dollar audit liabilities, not because the teachers were not teaching their subjects. Auditors had problems with the way they were certifying their time and effort on programs. We are representing Philadelphia, 1 year, $138 million audit exception for time and effort. Detroit, $51 million. Houston, $245 million. New Orleans, $26 million. Again, the auditors weren't saying, oh, you failed to provide services to eligible students for eligible costs. No, they're saying, we did not like your time and effort certifications. So these bells went off in Washington. If there are all these multi-million-dollar audits, maybe there's a problem with the way the rules are written. So I think that was a major motivating factor. Another major motivating factor was a belief by the federal government, particularly the Office of Management and Budget, that the federal government is getting ripped off with regard to indirect costs, particularly post-secondary institutions, where Stanford University charging like an 82% indirect cost rate, and those indirect cost reimbursements are going to buy a yacht for the university president. The federal government said, you know, we may be paying too much under indirect costs, and we believe that even local systems are double charging. They're getting paid once on a direct cost basis, and they're picking it up again under reimbursement under indirect costs. We've got to revisit that. We've got to revisit that. So all these things are going on and saying maybe it's time to shake the system up and try to make it right. So we're going to change the rules. So on December 26th, I've got the citation there, they came out with final guidance. That's the document that Paul's asked everyone to have for the session today. That is the document that we are going to be using. That document said to the 35 agencies that give out federal grants, you have 6 months until June 26, 2014 to submit your revisions to the uniform guidance. In other words, where do you want to differentiate from what is in this OMB guidance? What they do not say in the document that you have, but which they clearly dictated to the agency, was don't you dare make any changes, because we ain't tolerating it. And I've been to conferences with the National Science Foundation, the Department of Labor, HHS, Education, and they all confessed we were pressured to hold the line. So we were told by officials from the Office of the Secretary within the U.S. Education Department, we made 2 minor changes to the 100 pages in the Federal Register, which will come out tomorrow. One deals with the fact that Congress has said there's certain things that the Secretary of Education cannot waive. They just wanted to put that into it. And also with regard to high-risk status, a policy that the department has maintained will be continued, but nothing major. They said it is 99.99% the same as the December 26, 2013 guidance that you have. Department of Labor, same thing. No, they said no changes. NSF, Science Foundation, no changes. OMB said you will fall in line. So They had it to June 26th to draft it. On June 26th, they submitted it to OMB for review. On August 29, you see a reference to this acronym COFAR. That's Council on Federal Assistance Reform. That is the organization that wrote all these changes, COFAR, the Council on Federal Assistance Reform. Essentially 2 or 3 individuals from each federal agency. They've been sitting in a room for a couple of years, and they've come up with this document. It's obvious there was no master editor. We have found inconsistencies. Obviously, one person did not write the entire document. And then they said, by December 26, 2014, next week, the day after Christmas, the final EDGAR, the final DOL, the final Department of Ag reg will be published. But then on Monday of this week, they said, okay, these are the days. On Thursday of this week, they will release on the internet each agency's final rules. And then on Friday of this week, it will be published in the Federal Register. Steve, you want to explain the $10 bet that you and I made a couple weeks ago? Please.
In the near decade I've been working for Michael, the federal government has never met a deadline they said they were going to. So it's made me somewhat cynical, and I bet him $10 we would not have it by December 26th. Even with the announcement this week, I'm not convinced that he seems sold out.
Does anybody else want to take that? I'm pretty confident it will be out on the internet tomorrow. It's done. Out on the internet tomorrow and in the Federal Register on Friday. So what will President?
So you're saying EDGAR will be out tomorrow?
Right,
And there's only 2 minor changes to EDGAR?
No. 2 minor changes to what is in the 100-page document here. This is completely revamped. EDGAR is completely revamped. So let me just jump back to EDGAR. Prior to 1976, each federal education program would publish within its program regulations, every federal program of the approximately 150 federal education programs had a set of program regulations. So you've got Congress passing the statute. The statute's just the bare bones saying the purpose is X, Y, and Z. Eligible recipients are A, B, and C. The monies can be used for this purpose and that purpose. Very, very short, even though some of the statutes went on and on, it was bare bones. Then the Congress would delegate to the agency the responsibility to issue programmatic regulations. In those programmatic regulations in the 1970s, some of you are really bored with this history, but in the 1970s, each set of program regs had the administrative rules and the cost rules. And then there was a realization, why are we doing this for each of the 150 programs? It will make much more sense to distill all of those administrative and cost rules out and put them into one set, and thus was born EDGAR. It was first the U.S. Office of Education, administrative rules, and then in 1980, the U.S. Education Department went into being, and it became EDGAR, the Education Department, General Administrative Rules. EDGAR is divided up into parts. Part 74 of EDGAR are the administrative rules for post-secondary agencies and nonprofits. Part 80 of EDGAR are the administrative rules for state education agencies and local school districts. Those parts, 74 and 80, are out the window. They are completely rewritten by the Uniform Grant Guidance. There are other parts of EDGAR, for example, Part 76, which are the rules that govern state-administered programs, such as ESEA and IDEA and Perkins, which will be untouched by this guidance tomorrow. So when all is said and done, the U.S. Education Department announced a couple of months ago that what will come out tomorrow will be called, so that there's no confusion, because it is confusing. They said, we're calling what comes out tomorrow interim final. Don't you love that? Interim final. Interim final, because what comes out tomorrow is a new Part 74, a new Part 80, and actually they've been collapsed into one. But Part 76, Part 81 dealing with enforcement, other parts dealing with privacy, Part 99, they will stay, but over the next year or so, we will continue to revise those other parts as deemed necessary, thus we're calling it interim final. Everybody in the same page on that? But that, tomorrow is the interim final, and we're seeing the rewrite of the administrative rules, and the rewrite of the cost rules, and the rewrite of the audit rules. The government printing office, about 5 or 6 years ago, got out of the business of doing a codification of Edgar, pulling all the administrative rules together. It was just an opening. I mean, they created a vacuum, and that was an opening for us. So our firm took the responsibility on. We do the Edgars. We actually sell them to the education department. But as soon as this comes out tomorrow, we will fold all the changes and put out a new Edgar reflecting what the current law is. But to answer your question, yes, significant parts of Edgar will change really as of tomorrow. Okay, effective date, real important, effective date. And COFAR has provided some guidance on this. COFAR has said, for state-administered programs, ESEA, IDEA programs, the effective date of these changes will be July 1, 2015. For all direct discretionary programs where the monies go from any federal agencies such as National Science Foundation, Labor, Ed, HHS, to Alaska Department of Ed, University of Alaska. University of Alaska obviously is participating in a number of Higher Education Act discretionary programs, competitive programs, Gear Up, Upward Bound, Support Services, and so forth. Any award that is issued after December 26th is subject to the new rules. In addition, any existing award that receives incremental funding after December 26th will be subject to the new rules. So for example, there are institutions in Alaska participating with the Department of Labor and Trade Adjustment Assistance. If Congress provided incremental funding after December 26th to the same grant that was received prior to December 26th, that would be subject to the new rules. Bottom line, you're going to have some schizophrenic auditors out there because they're going to be going out, looking at the books, in some instances applying the old rules, some instances applying the new rules. And that's just a fact of life, because institutions may have some funds that are state administered, they have other funds that are direct discretionary, they have to bring in a single auditor to look at them all, and therefore they're going to be subject to two different sets of rules. Yes?
Just a question. I have two of our child nutrition programs are funded right now on continuing resolution, so we haven't received full funding yet. When we receive the full funding, will that be after the 26th and impacted by that?
Okay, can you elaborate when you say, I mean, all programs are on continuing resolution right now, and then this omnibus that the president just signed reverted. You see, on October 1, they were supposed to come up with an appropriations bill. They did not, so they put the government on a continuing resolution. Yesterday, or 2 days ago, the president signed the omnibus, which made funding permanent through September 30.
They're grant programs, and so...
Which programs specifically?
Sorry, the TFAP program, Temporary Emergency Food Assistance Program, and the Fresh Fruit and Vegetable Program.
Right.
So we only received partial funding, where most of the child nutrition programs we received by block grant.
What do you think? I would think that they would, in every other program at Ed, which would be in a similar boat, these rules would not take effect until July 1.
I agree.
Until July 1. Okay, so what's covered by this? So, in the past, there was a terminology used called circular. A circular is a regulation, it's the law, but it's more than a regular regulation. It's a regulation from the OMB, Office of Management of the White House. So they wanted to give it, because these were super regulations, they wanted to give them a special name, and they called them circulars. But they're regulations. So A102, as I mentioned, this is a Part 80. These are the administrative rules for state and local school districts. A110, administrative rules, Part 74 for post-secondary. Cost rules, OMB Circular 87, state and local. Cost rules for post-secondary, A21. Separate cost rules for nonprofit, A122. And then all of the audit rules, A133. All of these are now being collapsed into one. Paul called it super circular. OMB is calling it now UGG, Uniform Grant Guidance. So keep in mind, if you were a school district, A87 had different rules on time and effort certifications than A21, which had different rules on time and effort certification than A122. And we talk about nonprofits, as you know, more and more programs, federal programs, are lending to non-traditional providers. Nonprofits, state-based, community-based organizations who participate in these programs, they have their own rules. Now everyone's subject to the same rules. You can't say, oh, I'm not following those time and effort rules because I'm a nonprofit. Now everyone's subject to the same rules. Question?
So there's also an accompaniment usually to A133 known as the compliance supplements. Are you expecting changes to those?
Did you hear that in the back?
No.
Because that was a great question. Thank you so much. She, for the first time, mentioned a term called the compliance supplement. And let me just quickly elaborate on the compliance supplement. So if you were to go online to www.whitehouse.gov/OMB/circulars, you will see OMB puts out lots of circulars. These are just some of the circulars. If you go down to the last one, A133, at the end of A133, there's a reference, and you can go to compliance supplement. It says compliance supplement. Compliance supplement is the Bible for the single auditors. It's the Single Audit Act of 1981 states very clearly that a grantee, subgrantee, auditee cannot use federal funds to pay for an audit if the audit is substandard, obviously. The audit cannot be substandard. So auditors carrying out these single audits have to follow a guideline. That guideline is called the compliance supplement. The compliance supplement is an online document that is updated every year by OMB. Now what happens? Every year, OMB calls every federal agency, there's 35 that give out federal grants. They'll call up the U.S. Education Department. They don't call up and say, Arnie Duncan, what's different this year? They call up each programmatic unit within each agency. So at the U.S. Education Department, they call the Office of Post-Secondary Ed. They call the Office of Elementary and Secondary. They call the Office of Special Ed and Rehabilitation Services. And they call the Office of Career Tech and Adult Education. And they ask the program folks, what changes do you want for the next 12 months to be in the compliance supplement? What do you want the single auditors to look at? That information is distilled into this one document, comes out in the spring of every year. Comes out supposedly in April, last 2 years it's been coming out in May. It's online. The state should be familiar with it, all the school districts should be familiar with it, because if you're familiar with what the auditor is going to look for, it's going to make everybody's life much, much easier. But there's a slight wrinkle to this. There's a slight, remember I said there were some overarching reasons why OMB wanted to rewrite all this? I said, one, there were too many time and effort on it. They were really worried that they were getting robbed on indirect costs. And for some reason, which I don't fully understand, I think they believe that the life of the single auditor is really tough, and they wanted to make things a little bit simpler. The compliance supplement is set up for the last 30 years, covering 14 sets of internal controls that the auditors look at when they go to any organization. When this process began in 2011, and OMB put out announcements in 2011, in 2012, and 2013, and now 14, they have said repeatedly, look at the compliance supplement as the basis for going forward with regard to the work of the auditors. OMB initially proposed that those 14 sets of internal controls be reduced to 7. Now, you're sitting here and saying, why is Michael telling us this? Why is this relevant to me? It is relevant to every single person in this room. Because if in the compliance supplement that comes out in the spring of 2015, OMB does reduce the 14 sets of controls to 7, guess what happens to the other 7? They don't go away. They become the responsibility of the pass-through. Who's the pass-through? Everybody in this room. So, you should pray that the auditors are still stuck with 14 sets of controls, because for each one that's reduced, that becomes your responsibility as the pass-through.
So you're saying OMB is leaving that up to the each individual agencies to determine whether the 14 compliance requirements
No.
are safe or
No. It will be decision by OMB in the compliance supplement. And they will identify which ones will now be the responsibility of the pass-through, which ones will be the responsibility of the single audit. Nobody has the answer to that yet. They kept on saying, stay tuned, stay tuned. We thought we were going to see it in the final document. They keep saying, no, look to the compliance supplement to get that answer. Who's covered? They no longer use the term recipients, subrecipients. They no longer use the term grantee, subgrantee. The term that's used for everyone is non-federal entities. So the Alaska Department of Ed, non-federal entity. University of Alaska, non-federal entity. School District of Anchorage, non-federal entity. Any charter that independently authorized of the school district, non-federal entity. So that's the terminology that's going to be used going forward. So just reiterating here, reasons for the change: simplicity, consistency, increasing efficiency, strengthening oversight. That being said, some of you may have this online. If you could turn to the document itself, this would be helpful. So turn to page 78608. 78608. Okay, and if you have it there, this is the table of contents of the Uniform Grant Guidance. It is divided into 6 parts, A through F. First, all awards coming to the Alaska Department of Ed will now be using this terminology. They will say these monies must be spent in accord with 2 CFR Part 200. That's Title II, Code of Federal Regulations, Part 200. That's the legal nomenclature. 2 CFR Part 200 is the Uniform Grant Guidance. Part 200 is divided into 6 subparts. The subparts that are most important, just briefly, Part A are your definitions. It's really helpful now to have these uniform definitions. Part D, over the next page, says post-federal award requirements. E, your cost principles. And going over to the next page, F, your audit requirements. So, in brief, Part D was OMB Circular A102. Part E was OMB Circular A87. Part F was OMB Circular A133. All now incorporated into one. So bear with me on this. You had separate circulars depending on the type of entity. You had certain language for post-secondary, different language for nonprofits, different language for state and local governments. So they're sitting in a room for 2 years, and they're saying, well, going forward, should we use the rule that applied to nonprofits? Should we use the rule that applied to post-secondary? Should we use the rule that applied to state and local governments? In some instances, they took the state and local government rule. Some instances, they took the post-secondary rule. Some instances, they took the nonprofit rule. No longer separate rules. Now everything folded into one. On D. Paul, did you want to say that?
Well, I don't want to interrupt, but when you come to a point, usually at 10 o'clock, there's a union negotiated break that I just want to honor sometime around there.
Can we go break it at 10:15?
That sounds good.
Okay?
Yep.
Okay, thanks for telling me about the union break. Okay. All right, if you would just briefly look at page 7609, D, post-federal award requirements, and just look at what is here. Obviously, this is all going to be in the new Edgar, but here you have financial management, internal controls, payment, cost sharing, program income, revision of budgets, period of performance, insurance, equipment, supplies, intangibles, general procurement standards, competition, the various methods of procurement to be followed, going down to financial reporting, monitoring, subrecipient monitoring and management, subrecipient and contractor determinations, requirements for pass-throughs. You might want to circle that 331 because it's going to make everybody in this room's job much tougher. All new requirements to the pass-through entity. Retention records for records, access to records, remedies for noncompliance, termination, and so forth. A lot of important stuff in these administrative rules. Okay, and then, as I mentioned, E, cost principles, F, audit principles. So here we set down in the slide the different breakdown of the 6 subparts. Okay, on definitions, just a few that I wanted to draw your attention to. That there will be a distinction between cognizant agency for audit and cognizant agency for indirect. The cognizant agency for audit typically is the agency, the federal agency, where the non-federal entity receives the bulk or the majority of its funding from. Would be the cognizant agency for audit. That is, the audit report ultimately goes to that agency where most of the monies come from. The cognizant agency for indirect is not necessarily the same agency. The University of Alaska, for example, its cognizant agency for audit is the U.S. Education Department. Its cognizant agency for indirect is the Department of Health and Human Services. The Department of Health and Human Services, HHS, being one of the largest federal agencies, is the federal agency that sets indirect cost rates for all post-secondary institutions in the United States. So we need to make that distinction. Computing devices, as I mentioned, is defined, is now included under supplies, and there's a reason for that, particularly when we get to the issue of disposition. But it was never defined before. We never had a special definition for computers, and now we do. I mentioned to you cooperative audit resolution. In the notice of proposed rulemaking, which came out in February of 2013, OMB said that if an auditee is willing to undertake immediate corrective action, then the federal awarding agency shall grant amnesty to that auditee if there was no intentional wrongdoing or fraud. Let me repeat that. The notice of proposed rulemaking said, going forward, if you are willing to improve the management of the program and there was no intentional wrongdoing, then amnesty will be afforded. The inspector generals of each of the agencies, they had a little problem with that. So the final rule dropped the reference to amnesty, but does state that it's undergirded by the willingness of the auditee to undertake immediate corrective action, no intentional wrongdoing or fraud. That must be taken into account by the federal awarding agency in determination as to whether to ask for any funds back. Cooperative audit resolution has been the audit standard at the U.S. Education Department since 1995. It was started by our law firm in a case that we litigated on behalf of Florida, and then we worked with the U.S. Education Department, the Chief Financial Officer, the Office of the Inspector General, and now it is a mainstay of their audit resolution process. When the state of Alaska gets a program determination letter sustaining an audit finding, there will be boilerplate in that, and it's been for the past decade, a paragraph that says Alaska may avail itself of cooperative audit resolution. And then we advise all of our clients to trigger that rather than having to pay monies back. It was unique to the U.S. Education Department, now it's government-wide. And we were delighted to see that it's now government-wide. Cost objective, if you return to page 78612, very important, we discussed this at some length yesterday with Kurt's CTE team, cost objective. When you provide guidance to the field, and the question comes in, how do we report time and effort? The law continues to require that time and effort be reported not by program, not that I worked in special ed or I worked in Title I, but the cost objectives under each program. I think the easiest way to understand cost objective, if a program has a percentage reserve set aside, say no more than 5% for administration, or no more than 5% for parental involvement, or no more than 10% for transportation cost. Wherever you have a percentage in any federal program, that is a cost objective. And if you look on page 78612, where it defines cost objective means a program function, activity award, organizational subdivision, contract, or work unit for which cost data are desired and for which provision is made to accumulate and measure the cost of the processes, products, jobs, and capital projects. It simply is code for saying all non-federal entities must retain documentation which certifies what cost objectives in that program that they work on. Not what program, but what cost objectives within that particular program. So a very important definition. I'm not going to go over these additional definitions. 5 more minutes, we'll take a break. Conflict of interest, 78621. We start with conflicts on the bottom of page 78621, left-hand column, and then going over to the top of the next column, provision on mandatory disclosures, which include wrongdoing conflicts and gratuity violations. I have spent quite a bit of time over the last several weeks in Alabama. I feel that I live in the Birmingham, Alabama airport for some reason. We're getting stuck there so much. But I bring up Alabama because we had, some of you in this room have come to our forums. Our firm puts on 2 national grant management forums each year. First week of May and the week after Thanksgiving. The one in May is in Washington, typically the one after Thanksgiving is in Las Vegas, but we had it 2 weeks ago in New Orleans to great success. And we invite federal officials. We've invited and we've had for the last several years Gil Tran. Gil Tran is the director of OMB. He's the architect of these regulations. He's a fabulous speaker, but he talks about what OMB has tried to do. We've had always individuals from the Office of the Inspector General, the Office of the Secretary. So 2 weeks ago, we're in New Orleans, and the Regional Inspector General out of Atlanta, Denise Wemby, comes to New Orleans to talk. And of course, not to my surprise, the first thing she wants to talk about is conflict of interest in the great state of Alabama, to say how pleased she was that the week before, the Director of Federal Grant Programs for the Alabama Department of Ed, a woman who, interestingly, had come to a number of our forums where we talked about conflict, was just convicted with her husband by a jury and will be being marched off to prison for many, many years. And of course, sometimes they take great pride, the Inspector Generals, in talking about this. But here you had, in your sister agency in Alabama, the Director of Federal Grants, a high-level position in the state education agency, who, when the SIG grants, the Supplemental Improvement Grant, came along under the ARA, decided that she was going to award the SIG grants to those school districts in the great state of Alabama that were doing business with her husband's software firm. But obviously, they always, so many of our clients, I concede, are still in jail. And they just don't listen. They think that they can manipulate the process. She thought that she could get away with it. And obviously, she didn't. And she's going to jail, but her husband's going to jail too, if that's any penance, that, you know, her husband's also going to jail. But the fact of the matter, if you want to rub the feds the wrong way, that's the way to do it. It drives them crazy. So we see references now to conflicts throughout the uniform guidance. The federal government is making a really big deal of it. In terms of part of the punishments in Alabama, Alabama was required as corrective action to have our firm do conflicts of interest training for every school district in the state, and every new employee had to sign an assurance that they understood the ramifications of conflicts. It's important going forward. So you need to know that. And the standard on conflicts is set out here on the provision on contracts. And let me just give that to you. If you turn to page 78631, 78631, middle column, 200.318 General Procurement Standards, the very bottom there in the middle column, C1. The non-federal entity, you, must maintain written standards of conduct covering conflicts of interest. And then the standard is, no employee, officer, or agent must participate in the selection, award, or administration of a contract supported by a federal award if he or she has a real or apparent conflict of interest. Such a conflict would arise when the employee, officer, agent, any member of his or her family, his or her partner, or an organization which employs or is about to employ any of the parties indicated herein, has a financial or other interest in or tangible benefit from a firm considered for a contract. The officers, employees, and agents of the non-federal entity must neither solicit nor accept gratuities, favors, or anything of monetary value from contractors or parties to subcontract. It requires every state agency, every local agency, all your districts going forward to have a written conflicts of interest policy and a written policy on gratuities. So if you go to page 78621, mandatory disclosures, the non-federal entity or applicant for a federal award must disclose in a timely manner in writing to the federal awarding agency or to you, the pass-through, all violations of federal criminal law involving fraud, bribery, or gratuity violations, potentially affecting the federal award. The difference between the conflict, between the bribe and the gratuity is that some of you may have been following this trial that we had back in Richmond, Virginia over the summer with the former governor and his wife as to whether the governor provided any quid pro quo to this vendor in Richmond, Virginia. And the jury found, yes, the governor did provide special access to this particular vendor. That was a bribe. A gratuity does not require a quid pro quo. So accepting favors from businesses, vendors that do business may or may not violate the gratuity violation basis. You won't know until you put it into writing. And it's going to be required that the Alaska Department of Education have a written policy on gratuity violations. At what level is that gift, that dinner, that whatever, exceed a standard where it needs to be reported as potentially affecting the award? And throughout the rest of the morning, we're going to also reference for you where written standards are necessary. So we'll take a break. I went 1 minute over, Paul. We'll take a break. Paul, under union rules, how long is the break for?